Analysts at EDC Securities said the recent monetary policy rate hike does not seem to impact the equities market's direction at the moment as investors continue to bargain hunt on stocks perceived to have attractive entry levels. Olamofe Mathew, analyst at EDC Securities, joins me for more market updates. Olamofe, thank you for joining us today.
Thank you very much for having me.
A strong performance at the market today, over 2% at the close of trading today. And of course, market obviously also digesting the outcome of the MPC meeting yesterday, 1% rate hike. Help us understand how did this fit into market sentiment today?
So thank you for having me. We haven't seen so much of that decision impact on equity market performance today. Like you rightly mentioned, the market was well above 2% at the end of today's trading session. Stocks like Dangote Cement and Bua Cement led the market to positive territory today. They were the major drivers of the bullish performance we saw in the market at the end of the day. We also saw gains in the likes of Nigerian bureaus and some banking like Access Bank and Zenith Bank. They also posted positive. Overall, we haven't seen the impacts of that this rate hike really feed into sentiments in the equity markets. Of course, but going forward, you probably would agree with me that the market has witnessed sell-offs from the significant gains we saw mid-year. I mean, it's just at around 4% to this gain, maybe around 6%. So it makes sense to say that over time we'll probably see that sentiments feeding. Maybe not as much as we're expecting because market is already trading at somewhat flat level. I think we may still expect to see some level of profit-taking sell-off. As a lot of people will probably want to play more in the fixed income space, given the fact that it's quite attractive at this level.
But if that happens, if we do see that exit and some stocks price levels and some stocks do drop, that could potentially present a good entry or re-entry point for savvy, of course, investors. But what kind of stocks will be on your radar if that happens?
Okay, so I think we've always advised that in a climate like this, where we have a lot of challenges with the market environment and we've not really seen so much portfolio participation in the market. Our market has been more local driven, and even the locals, particularly GFAs, now tilted towards focusing on fixed income space, given the fact that the space is quite attractive. Investors most likely should have to focus more on dividend strategy. And if you're buying a stock, stock has to be first fundamentally sound. Stock has to have a history of paying dividends and present good dividend yield. So stocks like Zenith Bank and Bank fall into that bucket. I mean, some other stocks like WAPCO, even not in terms of dividend yield, but having a medium to long-term horizon also presents good opportunity in terms of capital appreciation. I think the emphasis on medium to long-term horizon. Stocks like Total, stocks that present good entry-level points. So I agree with you perfectly. At the time when we spend the trace downwards, investors are expected to share a pick and have these strategies in mind.
Now, for those stocks that are among they've made it to the list of the best performing stocks this year, apart from a high dividend yield, what would you say they all have in common? What is the common theme among these stocks?
I mean, for the stocks that really pushed market up this year, and of course, you agree with me, we've seen them in trace. Stocks like EDC Africa and all of these telco names. I mean, for one, it's a story of people repatriating funds, given the fact that we had FX scarcity in the market, right? And the stocks went to a level that was not so attractive again, and we started to see profit taking at that level. So, I mean, if you look at the markets throughout the year, generally performance have been not so great. Those names. So most of those names, except for some few names like Excel, that drove market up to 1% levels, right? But I mean, generally, if you take away the discount impact of FX scarcity performance, I mean, probably it's not really so much of a great for Nigeria stock market performance.
Now, for the most liquid sector of the market, the banking sector, I know that obviously that's always, on any given day, always investors' favorites. But with the recent downgrade by Fitch of 7 Nigerian banks, how did the market take that? Was there any impact on the market?
Can we say that again?
So recently, as you know, in the news, Fitch Ratings did downgrade 7 Nigerian banks to B-, but with a stable outlook. Did that impact on the share price or movement of those stocks?
I mean, interestingly, I mean, stocks like GT actually closed up yesterday. Like I mentioned, Access Bank, Zenith Bank, some of the stocks are also closed positive today. So, I mean, you mean that we didn't really see so much of a reaction, and the reason being that it minus the impact of these announcements and this downgrade by Fitch, this sector has already experienced significant sell-off during the year. I mean, from regulatory standpoint. I mean, you are aware of the CR, which are the CR increments, and other macroeconomic issues are really impaired on loan creation and the rest. So all of this combined together has really weighed down the sector. So this downgrade is just another negative news that's really does not really have so much of an impact because the banking sector is already really down itself. Right. I mean, how look can it go from this level as the person to ask?